Hello again, everyone. In this technical analysis of the stock market weekend update, I'm going to take a look at the Dow Industrials and a couple key ETFs and a couple charts of global China and Germany. And I've got a special feature I want to show about crude oil and the implications for our market. We're going to show that at the end of the video, so stay tuned. All right, right here we're going to take a look at this last week has been a down, up kind of week. It started with a big bang on Tuesday to the downside with all those concerns about the financial markets and the banks in Italy and the contagion and Italy's government, et cetera, et cetera. And then we ended the week here on an up day with up 219.37 on the Dow Industrial. So the wave count hasn't changed. The alternate wave count is that instead of 1, 2 here, that it is 1, 2 here, and I show that as alternate count right in here. So that's what I'm kind of watching right now. I'm really expecting this thing to accelerate to the downside, but it has also meandered quite a bit sideways over the last several months. Let's take a look at the weekly chart, and you can see we broke the low of the last 2 weeks. We were down 117.8 this week, and a little doji candle because we, the big break on Tuesday, and we kind of came back, and so watching to see, do we get continuation? And this week, does this week's low hold, or is it going to break and we continue to roll over out of here? All right, that's the picture on the weekly view. Let's take a look at the high yield bond fund. The high yield bond fund continues to show risk off situation, and we got the breakdown out of this symmetrical triangle in here. This consolidation had been going on for weeks. We got that break on Tuesday. We pulled back up to the pattern on Wednesday, hugged in there on Thursday, and surprisingly enough, broke down on Friday. When I say surprisingly, because usually if the market's going up, this kind of has a tendency to go with the market unless it's signaling something else. And right now it looks like it's signaling something else, and that means risk off. This has been a fairly weak picture for the overall market, and this is it continues to be one that a lot of people watch and a lot of people look at. Let's take a look at the long-term treasury bond, TLT, a very active ETF in here. This came down, got a lot of support down here in this 116.5, 117 area, and actually trapped some bears with this move. As it broke down and closed below that support zone and then reversed and came right back up into it. And here all of a sudden now on Tuesday we're hitting this resistance area up above, up here, 122.5. So the real question is going to be, which way is it going to go? And I think right now, you just have to wait and see how it shows itself in terms of the price action. Does it break above this, or does it come back down and break below down here? That's the picture on the long-term treasury bonds. Just kind of looks like it's oscillating in there right now. Let's take a look at some of our trading partners. And, with this whole trade war, everything that's going on, and yeah, they don't want to, we didn't impose tariffs, or we agreed between China and the United States, we agreed to keep talking and not impose tariffs, but there are tariffs being imposed on Canada, Mexico, and others. So right now there's a lot of things, a lot of tensions rising in the global community. All right, so China continues, Shanghai Composite continues to sell off. I'm very bearish on this. This just looks like it's working its way down. Big reversal candle here the week before. Now we got continued movement to the downside, down 66.16 for the week. This is the bigger picture. As you can see from that big peak that happened back in 2015. And, we had this really choppy sideways, movement that occurred over the last 2 years. Look at this. This is the 2-year rally that we had in our stock market from that low in January 2016 to the high here in January 2018. Well, here's what China did. Not much. That wasn't a very big move in here. And so right now I'm looking for further breakdown in this market. Now, Germany has been acting fairly well. But, you know, and it rallied to new highs here at the end of 2017 into 2018. But right now, you know, it's broken this trend line, the 2-year trend line in here, and it's was down 213.7 points for the week after this reversal candle. It's interesting, a lot of the country indices did this move after really, I mean, Japan had an 8-week rally, Germany did, UK, France, 8 weeks in a row up, and then all of a sudden we're getting this. This is fairly negative this week, closing below the trading of the last 3 weeks in here. And when you look at where the German DAX is, this is the last week of 2017. It is down for 2018. It is currently at the close on Friday, down for the year. All right, so that's the German DAX. Let's take a look at the XLF, the financials this week, which, you know, that got the attention at the beginning of the week. They clawed their way back a little bit in here to a doji candle. You can see how it came back low, but it also closed below the trading of the last 2 weeks. This just looks like it's starting to roll over a little bit. And of course, a reinforcement of that will be a break of this last week's low. And that's what we'll be watching. You know, we've broken this trend line just like Germany. Okay, just like Germany, we've broken this trend line, and we've got the longer-term trend line, which is exactly what it is on the German DAX. If you go back here, this longer-term trend line is the entire bull move that's going on. Okay, all right. So then the other one I wanted to look at is the European financials, which of course that got our attention this week, and you can see what happened, down 48 cents this week. Dollar-wise, it's not a whole lot. Percentage-wise, it's pretty big. And we got a little potential reversal candle in here. And I say potential because, you know, you need to have follow-through to the upside. If it breaks this low, it'll be very negative. And you got this big gap over here that's just begging to be closed. And then you look at this, it almost looks like, you know, it almost looks like a top. Almost looks like a little head and shoulders type of top in here. Okay, so that's what jumps out at me when I see that. All right, so that's the financials. Now, let's take a look at crude oil. This article by Tom McClellan really got my attention. This is, you can get this, you can go look at this at mcoscillator.com and then check in on the Learning Center, mcoscillator.com, Learning Center. He's talking about what he's done is he's taken crude oil and he's taken literally the chart and you move it forward 10 years so that what you're looking at is say, okay, well, here's the Dow Industrials for the current year and where we're at right now. And what he's comparing it to is where was crude oil 10 years ago and what happened to crude oil. And it turns out that this has been a fairly good leading indicator of what's going on with the Dow Jones Industrial Average. And of course, 10 years ago, we had that huge drop in oil, went from over $140 a barrel to around $40 a barrel in like 7 months. Big collapse. Okay, the implications being that we have an echo of that big drop about to occur in 2018. Okay, well, that kind of coincides with what I'm seeing with the Elliott wave and what I'm expecting in an Elliott wave move in the Elliott wave charts. And let's see a couple other things he talks about. So he shows 20 years here. And of course, he's carrying crude oil out into the future, okay, is what he's doing. He's carrying it out into the future because he set this forward by 10 years, all right? So he says it's not a precise model, but it's very good, okay? And so he looks at everything from 1900 in here. I think this is a month. Yeah, it's a monthly chart. And he does the same thing. Starting to lose my voice here. And he sets it forward 10 years, and you can see 1920, 1929. This is actually 9 years, and he even says that it tends to be 9.5 to 10.5 years. And so really interesting turning points in here. And this really, if you look at this model, I mean, this just, the Elliott wave cycles just jump right out at you on this. So that is something I want you to take a look at. I find it very, very interesting. We'll see what happens, and we'll be watching for that this year also. That's it for this weekend. If you felt like the video was helpful, hit the like button. And if you're not a subscriber to this channel, hit the subscribe button. If you could think of one person who might benefit by viewing this video, share the video with them. And if you want to get more inside education and trade ideas, become an insider member, head on over to my website here at joehinches.net. And or click on the little my little face on the screen. Click on that little icon. It'll take you over there. Everyone have a wonderful weekend, and we'll talk to you on the next video.